Welcome back to Ride Rank, your go-to source for everything on wheels. Before we dive in, make sure to hit that subscribe button and turn on the bell so you don't miss out on the latest car tips, news, and smart buyer guides. Now let me ask you a question. Do you really know what you're paying for when it comes to car insurance? Because in 2025, premiums are climbing, and most drivers are paying way more than they should. Stick around, because in this video, we're breaking down the real truth behind car insurance pricing in 2025 and how you can avoid getting ripped off. Rising rates across the country. It's no secret that auto insurance rates are rising across the US. But why? Inflation, increasing car repair costs, and advanced vehicle tech are all factors. Modern vehicles have expensive sensors, cameras, and parts. So even a fender bender could cost thousands to fix. Insurance companies are adjusting their rates to cover these costs. But here's the kicker. Not every insurer is raising prices the same way. Some are increasing rates just because they can, especially in high demand or low competition states. You're paying for things you don't need. Many drivers don't realize they're overpaying for extra coverage they'll never use. Do you need roadside assistance if you already have AAA? Probably not. Do you need rental car reimbursement if you have a second car or work remotely? Maybe not. In 2025, many policies are packed with add-ons, and insurers don't go out of their way to explain them. Review your policy line by line. You'd be shocked how much fluff is in there. Your credit score is still hurting you. Even in 2025, most states still let insurers use your credit score to set your premium. That means if your credit took a hit, your rate likely went up, even if you've never had an accident. Some states are starting to push back on this practice, but it's still legal in most of the US. Make sure your insurer isn't over-penalizing you for something that doesn't even relate to your driving. Loyalty doesn't pay. You might think sticking with one insurer saves you money. Wrong. Studies in 2025 show that longtime policyholders often pay more than new customers. It's called price optimization. Insurers know that loyal customers are less likely to shop around, so they slowly raise your rates over time. Shop for quotes every 6 to 12 months. It's one of the easiest ways to instantly save hundreds. Location-based pricing is wildly unfair. Your zip code plays a huge role in what you pay, even more than your driving record in some cases. Live in a city with high crime or traffic? Boom, higher rates. But in 2025, with more remote work and flexible lifestyles, you don't have to just accept it. If you move to a different part of your city or state, your premium could drop significantly. Talk to your agent about how your location impacts your rate. You might be able to adjust your garaging address legally. How to lower your premium in 2025. Now let's talk solutions. Here's what you can do right now. Bundle smartly. Combine auto and home renters insurance for discounts. But don't assume it's cheaper until you compare. Increase your deductible. If you can afford a little more out of pocket during a claim, raise your deductible to lower monthly costs. Use telematics. Many companies offer usage-based policies. If you're a safe driver, you could save up to 30% or more. Remove unnecessary add-ons. We mentioned this earlier, but it's worth repeating. Ditch what you don't need. Ask for discounts. Military, student, safe driving, defensive driving courses. Ask what you qualify for. Switch companies. Always compare quotes. Loyalty is expensive. The truth is, car insurance in 2025 doesn't have to break your wallet if you're informed and proactive. Don't let outdated policies or sneaky pricing models cost you thousands. If you learned something valuable today, give this video a like and share it with someone who needs to save on insurance. And of course, subscribe to Ride Rank for more tips that'll keep you smart on the road and ahead of the curve. See you in the next one.